Coinbase is finally going public this week on the NASDAQ under the ticker COIN. And naturally, there is a ton of hype surrounding this name because it's going to be the largest cryptocurrency related company to ever go public, with an expected valuation of around $50 to $150 billion. The question is, what type of investor is Coinbase really for? If you already own Bitcoin, should you be selling some of that to diversify into Coinbase? Or if you have no exposure to cryptocurrency, should you be using Coin as a proxy for the cryptocurrency market? I've dug through Coinbase's S1, which is essentially a formal filing about what Coinbase does as a business, and there's a lot to unpack about Coinbase and Coin as an investment. What Coinbase has achieved in 9 years is breathtaking. Billions and billions of dollars of trading volume, stunning growth numbers, and incredible accomplishments in the cryptocurrency space. But there are a lot of aspects to Coinbase's core business model where I question the sustainability of the linear and exponential growth that they've experienced so far. In this video, I want to unpack the good, the bad, and the ugly with the Coinbase IPO, and give my thoughts on whether it's something to kind of invest in, trade in, or just stay out of altogether. Coinbase's listing possibly has the best timing of any IPO or direct listing that I have ever seen. Bitcoin is at all-time highs, the stock market is all-time highs, mega corporations are diversifying their balance sheets into Bitcoin, NFTs are going mainstream, everyone's getting stimulus checks from the government, and even Paris Hilton is getting into Bitcoin.
Have you been in Bitcoin for a while?
Yes.
Well, I guess it's been a good trade.
It's like a dude perfect trick shot montage. You could have not dreamed up a better time for a company like this to go public. And Coinbase is also a lot different from other hyped up Silicon Valley IPOs that have come out over the last few years because it's actually profitable. It made about $317 million in profit last year on $1.1 billion of revenue. And even more stunning than that, they've actually made more in revenue in the first 90 days of 2021 than the entire fiscal year of 2020. So how is Coinbase making all of this revenue? Well, when you use Coinbase to buy Bitcoin or Ethereum or any other cryptocurrency asset, you're paying a transaction fee of around 0.5% to them, which means if you're buying a Bitcoin that's worth around $60,000, Coinbase is making around $300. And part of the reason that Coinbase has been able to charge fees to this extent is because they've been on the forefront of security and custody for such a long time. They've never been hacked in their entire history. They're among one of the most compliant exchanges out there, and they're basically a household name for anyone who has ever traded Bitcoin in the US. One of the newest aspects to Coinbase's growth story has been their connection to institutions and their offerings in that space. If you watched my last video on Michael Saylor, you'll know that 2020 was the year of mega conglomerates and public companies buying Bitcoin and putting it on their balance sheet as a way of preserving buying power against inflation. It's a stunning narrative that first started with MicroStrategy back in August 2020, and it's rippled into these large corporations like Tesla or Time Magazine, and Coinbase has been the prime broker for a lot of these companies. And for a company that has relied solely on retail traders for as long as it has, it's a really welcome shift that shows their ability to adapt their business model. In fact, because of this, they've actually been able to grow their market share over time, from custodying around 4.8% of crypto assets in 2018 to about 11.5% in 2020, which in of itself is really impressive if you consider that a whole bunch of new exchanges have popped up that are processing even more volume on a daily basis than Coinbase is. So that being said, what could possibly be the bad stuff? Coinbase's market and source of revenue is extremely reliant on Bitcoin and other cryptocurrency markets. They've stated in their filing that should those markets be hit by a slowing of growth or fear, Coinbase's bottom line and revenue would definitely be affected as well. And we know that after 12 years of cryptocurrencies that they like to move in cycles of 3 to 4 years around Bitcoin's halvings, which typically mean that the bull market cycles are a lot shorter than the bear market cycles. In addition to that, with every new cycle in the cryptocurrency space, new coins and assets emerge that shape the top 10 assets. While Coinbase has added most of these high volume in-demand altcoins, their strict adherence to regulators has also stopped them from adding certain assets like XRP, which is now under investigation by the SEC, or BNB, which is the crypto native token of the competitor exchange Binance. We know for certain that Bitcoin will be around forever and it'll likely always be the largest cryptocurrency, but the other 9 that dominate the top 10 seem to fluctuate dramatically. And if Coinbase cannot get access to these assets for all intents and purposes, it gives traders another reason to migrate onto another platform. Coinbase, unlike Bitcoin or other crypto assets, is also a security. It's equity in a company, and when it comes to Coinbase's share structure, there are a few little troubling elements that I've found as well. One of them is that there's zero lockup period on Coinbase shares when it goes live, which means that founders and people who have invested in Coinbase early are free to sell and cash out their shares to retail investors on day one. There's also a dual share structure in Coinbase, which means that the shares that you buy publicly through your broker only end up representing a total of 70% of all of the voting power in Coinbase, with about 54% of the voting power belonging to a handful of the initial founders and investment partners. And speaking of institutions, they now make up more of Coinbase's trading volume than retail traders, which is great when cryptocurrencies are going up and are in a bull market, but it also means that Coinbase's take rate is going down a lot quicker. Institutional investors are just not going to be paying that 0.5% to Coinbase that retail traders are, and they've even acknowledged this in their S1 filing, noting that their take rate has gone down over the last 5 years. And while Coinbase is often lauded for having a great user experience and security, anybody who's actually used the platform over the last year knows that their infrastructure sucks. In 2020, they had about 34 outages that lasted about an hour each, and it always seems to be when Bitcoin is at its most volatile. Now, what that means for their business model, I don't know, but if I was a trader on Coinbase, it would sort of be like a 3 strikes and you're out situation, and you can bet that there's a whole bunch of other exchanges competing with Coinbase on this front. Now, onto the ugly. And I want to preface that again, a lot of this stuff is just my opinion, but to me, the biggest weak point with Coinbase is this complete reliance on the fee-based model. It's sort of like that giant red weak spot that you see when you fight a boss in a game like Mario. And if that weak spot gets hit for Coinbase, it could mean that their revenues get crushed. Crypto exchanges have gotten away with murder when it comes to fees in the last 12 years of Bitcoin's growth because the barrier to entry into the crypto world has been so high. Access to wallets, easy user experience, good liquidity, these used to be things that were pretty limited in the crypto space, and Coinbase pioneered bringing these things to the masses. But now there are so many other ways to get exposure to cryptocurrency. You have companies like MicroStrategy, which are essentially just like Bitcoin funds. You have ETFs and trust funds that you can buy through your traditional brokerages. You have companies like PayPal, Robinhood, and Square, which lets you buy cryptocurrency alongside your stock portfolio. And this one might seem a little bit far-fetched, but I don't think we're that far off from seeing traditional banks offer crypto products like Bitcoin to their customers as well. In fact, companies like Morgan Stanley are already offering Bitcoin funds to their wealthy clients. Coinbase's revenue is going to rely on exponential growth in new users because we know the long game for fees is a race to the bottom. A new exchange or a name brand broker really is only one article of regulation away from coming out with flat or no fees for trading Bitcoin, and that presents a huge risk to Coinbase in the long term. My other gripe with Coinbase kind of goes back to this old adage of when you're in a gold rush, it's better to sell shovels and pickaxes. Coinbase takes a lot of credit for being this big on-ramp for retail and institutional investors getting their first taste of Bitcoin. But for a company that has been around since Bitcoin was $40 a coin, they actually own a surprisingly low amount of it. Coinbase reported that they own 4,400 BTC on their balance sheet, which is actually less than 0.25% of their expected valuation when they go public. And while it might be considered unfair to compare Coinbase's holdings of Bitcoin to a company like MicroStrategy or Tesla, a totally non-apples to oranges comparison would be to that of a company called Voyager Digital. Voyager is another cryptocurrency exchange that holds about 1,200 BTC on their balance sheet, despite them only having about 1% of the user base that Coinbase has and about 3% of the market cap of Coinbase. But they're holding about 30% of the BTC that Coinbase is, and that's saying a lot for a company that's been around for 3 years, but has really only been significant for the last 3 months. So sure, this whole idea of holding Bitcoin as a treasury reserve asset is a relatively new concept, and maybe Coinbase doesn't want any more exposure to Bitcoin than they already have. But you would think that a company that talks the talk would also walk the walk and put a little bit more of their retained earnings into an asset that has grown about 150% per year, which they helped bring to the mainstream. So overall, here are my thoughts. I think the launch of Coinbase as a public company is going going to be obviously monumental. It's going to give access to a lot of other portfolio managers and hedge funds exposure to the cryptocurrency space by being able to own this blue chip company in the space that's been pioneering for the last 9 years. But in my opinion, I don't think it's going to outperform Bitcoin over the next 2 years. It already hasn't as a private company since 2015. And if Bitcoin does go through another 60 to 70% correction in a bear market, I think that Coinbase is going to get hit a lot harder. The compelling reason to own Coinbase is really going to boil down to what investment vehicle and time frame that you have. It's a really great way of getting cryptocurrency exposure in a TFSA, 401k, or retirement savings account. I also don't think that Coinbase is going to be going away anytime soon, but I think this race to the bottom with fees just means that long term it's probably going to consistently underperform Bitcoin. In the immediate term though, I do think that Coinbase is going to do very, very well, and I think there's a lot of people excited to own it. And I think that if Bitcoin fulfills its mission to the stock to flow targets of 100 to 250k, Coinbase stands to benefit a lot from that. But yeah, those are just my thoughts on Coinbase, the IPO. I'm really looking forward to it nonetheless, and I'm curious what your stance is. Are you going to be owning it on day one? Are you going to be investing into it long term? Are you going to wait a little bit for it? Are you going to trade it, or are you going to just ignore it altogether? I'd love to know your thoughts. Just let me know in the comments down below. I'll be sure to respond and follow up to each and every one of them. And of course, if you like this video, you learned a little bit about the Coinbase IPO, please be sure to give it a thumbs up down below, as it really helps it reach more people. And of course, subscribe to the channel if you haven't, as we put out videos like this every single week. So again, thanks so much for watching. Take care, and I'll see you guys in the next one.